MISTI has been one of the most talked about ETFs lately. But what if I told you there's another fund that absolutely destroys it in backtesting? Today we're breaking down the numbers, comparing performance, yield, and overall return. By the end, you'll see why MISTI might not be the top choice investors think it is. So stay tuned. Welcome back to Simply Money. Today we're going to be looking at a fund that absolutely destroys MISTI. I've done a video on the channel. You can check it out here where I backtested MISTI, and I'll show you the results of that in a moment. But first, we're going to look at this other fund that absolutely crushed it. That fund is YBTC. Let's go ahead and take a look. We're going to go with the same scenario that we used, keeping the comparison the same with apples to apples here. We're doing a $50,000 investment. This fund, YBTC, started in January 18th, 2024. If we bought into it then, $49.55, that would have given us 1,009 shares. That's where we start, and we're going to look down and see some things a little bit different than MISTI and why the performance seems to be doing so much better. The price, we're going to scroll down real quick, just look at some of the pricing. Got up here to about $55, and it slipped down to $41 in September and started coming back up. And this red line right here, I want you to pay attention to throughout this video, because this is where they switched from giving a monthly dividend or distribution to paying a weekly distribution. So you're going to see some numbers, they look like they drastically change. And that's why, because they're paying out distributions every week versus every month. As we continue down the pricing, you can see the price has stayed pretty consistent. Even though it's a volatile fund, it hasn't fluctuated that much. It hasn't gained much, but it hasn't dropped that much. Low here, $41. So we get down into 2025, you can see the beginning of the year, it did creep down quite a bit. Got down here to $39, but then it started creeping back up, and as we look at the end here, we're right around $46. So there has been some drop in the share price in just under 2 years that we're tracking this. That's not a huge drop over 2 years. There's funds that have dropped way more than that, but this is an income generating fund. So we're going to look at that to see why this holding and maintaining such a stable pricing is really good. Now let's look at the dividends. Again, we have this first year here, 2024, where it was paying monthly. So you can see the dividends are $1.33. You got this March 24, this enormous $4 dividend here. Just right off the bat, you get a $4,400 payment that month. You're buying more shares with this, because on this scenario here, for those who are new to this channel, haven't seen my other videos, this scenario we're doing where we're taking the money and it's just automatically reinvesting and buying more of the same shares. This $1,342 distribution gets divided by the share price at the time, and that buys us more shares. So we go from the 1,009 shares up to 1,036 shares. We're tracking this as full drip, meaning that everything that comes in just goes and buys more of the same shares of the same fund of YBTC. You're seeing here the distributions, other than this, I'll call this outlier, you're between $1,300, $1,100 here, up to about $2,400, $2,500. Nice consistent income off our $50,000 distribution. But this is just being a nice consistent income off of a $50,000 investment. This is just being reinvested. Then we go to where it starts paying out distributions weekly. And you can see that obviously these are much less than these because you have to add them all up. In January, just that first year, you get a $1,600 payment, an $840, $560, $600, and a $1,400 distribution. January started out really strong. The price had climbed back up. It was doing really well in this time frame. They were given nice distributions. As the price dropped, the dividend amount has dropped somewhat. But as we get down here near the bottom, you can see the distributions are starting to pick up. And part of that, and this is where people have to understand, this is an income generating fund, and a lot of people will drip and reinvest their distribution to build up their shareholding to prepare for when they begin to take their distribution or take part of their distribution. They're getting a much larger payment off of their initial $50,000 investment. If you look at this after not white 2 years, a year and 9 months. We'll look at August since we have a full month there. You have $1,000, 700, 9, almost another $1,000, and then $1,000. You're looking at $3,600, give or take there, in distributions for that month. And the distributions aren't that high. They're 50 cents, 34 cents, because you have gained so many more shares. At this point, you've more than doubled your shares, the number of shares you have, so your distribution is much higher because you have so many more shares receiving this distribution amount. If we look down over the course of this time, it has paid out $55,000 in distributions, which you have reinvested. That brings us over to this column I, the value of the full drip. This is how much your portfolio is valued at if you're reinvesting everything. You can see we ended at $101,000. So you basically doubled your investment in just under 2 years. That's great. The rule of 72 says if you take 72, divide it by your yield amount, that's how many years it'll take to double. You're doubling in 2 years, where most funds you're looking at, they're thinking 5 to 10 years is good pace for doubling. This is a great return on your investment here. At this point, under 2 years, you're sitting at $100,000 now in value. You could turn this drip off and start receiving these weekly payments from this fund. Now, we want to look at the second scenario that we always look at, and that's a 50% drip. Again, a lot of people still get confused on this. I apologize. I'm going to keep working on explaining this for you to make sure you understand. For those who understand it, thank you for your patience. Feel free to leave me a comment down below. What's a better way I can explain this for those who may be struggling to grasp this? Because we all learn differently, we all understand things differently, and we all teach things differently. Leave that down below for the community. But 50% drip means that we're getting the same amount on this first payment, $13.42. I only put half of it, 50%, because this is the amount, 50% of the distribution, that you're reinvesting and buying more shares. As you can see, you get more shares here. You're up to 1,022. Versus if you use the entire distribution, you'd have 1,036. This 671 represents half of the distribution, which is being reinvested into the same fund. You also have $671 that you are taking. You're taking it, you're not using it for YBTC, you're using it to spend, you're living off of that, you're using it to buy other assets, whatever you do, but it's not going back into YBTC. This amount throughout this entire column, you're receiving double of this, but I'm putting it as 50%, half of it. So you're seeing you get this 671 twice. Half of it will reinvest, and half of it you use how you see fit outside of YBTC. As you get down further, and we'll go all the way down to the end, you got to remember it's not going to be 50% of this all the way down, because each month, each period, you're losing a little bit more because you're not buying as many shares. And so this becomes slowly less and less than this. As you can see here, this is 1,035. Half of that would be, what, $517? Well, you're only at $369, because with the full drip, you're up to 2,012 shares, where the 50% drip, you're only up to 1,429 shares. But remember, you're also getting the same amount that you're being able to spend and utilize. Don't let that discourage you. We come down to the bottom here, you can see you've received $22,708 that you have reinvested and bought more shares. That's given you 473 more shares. You have also received $22,708 that you've taken and that you've utilized for spending on your budget, on your bills, whatever it is you're using it for. The total of this would be $43,416, give or take. I'm doing my math in my head, so if I'm wrong, leave me a comment below and say, that was wrong math, buddy. I'm mathing, and mathing doesn't always math when you're doing it on the spot and recording. You're at $43,400 that you've received compared to the $55,000. This $55,000 has completely been reinvested. This $43,400, you've reinvested half, the $22,708, and you've spent $22,708. You have to see the difference there. Now, our last column is where we take zero drip, meaning you're just taking the distribution. You're not buying more shares. Your shares will always stay at the 1,009 value. You're not going to get more shares. You're not selling shares. You're just keeping that, and you're getting the distributions, whatever they may be, and you're using those how you see fit. starting out on $50,000, you're getting $1,300, $1,800, $4,100. Not bad. That's a nice little return on investment really quick there. We come down when we get to the weekly, where it switches over in 2025 to paying weekly distributions. You're still doing pretty nice. You got a $1,000 paycheck for the week, $500 for the week, $350, $380. $887 for the week. For your month of January, you can see you had a nice little payday there that you're receiving these distributions and you're spending them. As we come down to the bottom, we'll just scan through the end here. Through this scenario, if you just take your distributions, you paid $50,000, got 1,009 shares, and you're just taking that payday. You're taking that distribution every month and then every week as it comes in. And over just under 2 years, you've received $37,719. That's, again, a great distribution. And look at this, your balance with the no drip. You haven't bought any more shares. You've just let the value stay because the share price has not dropped that much, just right at $3. Your balance is still $47,000. Over 2 years, you received almost $38,000 back while maintaining $47,000 in your portfolio. With the 50-50, you've actually increased by $19,000 your value. Plus, you've received $22,000 in distributions. And then, as we said, the full drip, reinvesting, you haven't received any money out, but your value is now up $51,000 more than where you started. Looking at these scenarios, you can see it really depends on where you're at. If you're in the accumulation stage and you want to do this full drip and get your value up to then when you're ready to go to financial independence, you turn that off or you turn it partially off. Maybe at this point, you turn it to the 50-50, you're getting half of this amount and still building up this fund to increase your value and whatever it is you're doing. Or maybe you do a 70-30. Everyone's going to have a different approach. Perhaps you're ready to go independent financial lifestyle, and so you take $50,000 from somewhere and invest it into something like YBTC, and it starts paying you, and you're gathering this. If you averaged it out, about $11,000 a year of distribution of income while your portfolio continues to increase. You're increasing that portfolio, which is a nice thing to do in an income fund. Or perhaps you're like, you know what? I'm putting $50,000 in. This is going to help boost my income, and I'll ride this as long as I can, and then I'll readjust. Maybe you're older and you're like, I don't need this to last 40 years. And so you throw that in, and after 2 years, you're down just under $3,000, but you've received close to $20,000 a year in income. You look at these scenarios, you can see your total return of $51,000 on the full drip. That is the value of your portfolio. It's 102% return. Where here, the 50% drip, you have to take this amount, the 22,708, and add this gain that you've received, and that brings your total return to this 83.72% return, $41,860 gain that you've received from distributions and your value increase. You have to remember, when figuring up total return, you have to add in those distributions because that is return. What you do with it is up to you. You may blow it on a non-asset, but it's still return that you've got off of this $50,000. And your zero drip, meaning you're just taking that money, you're using it, you've received $37,719, but you have to subtract the value loss of just under $3,000. That brings your total return to $34,793, which is a 69.59% return. So basically 35% average on each year. And that's not even 2 years yet. We're just under 2 years. That's YBTC. Do you hold YBTC? Have you thought about holding it? Why or why not? Leave some comments down below. Let me know what you think about YBTC. I like seeing this stock price staying really pretty consistent. There hasn't been a huge drop down. And that's where I want to show you compared this to MISTI up here. Let's look at MISTI. I'm not going to recap it a ton. Just remember, this started shortly after YBTC in April at 42.65, but look where it ended at the end of August, 15.51. But we got to just compare total returns, because again, we're looking at total returns. In the same time frame, look at that, 34,000, 69%, which is still good. I'm not knocking how MISTI's performed. There is a lot of concern with this continual dropping of the share price, but the overall return, YBTC, has blown it away by 30%. With the 50% drip, it's blown it away by 30%. With the no drip, it's blown it away, but what was the 70% versus with no drip, you're looking at 55% difference, because it was at 70% on YBTC and only 15%. Because this share price dropping so much, you can see how your value on this scenario has dropped so significantly. Where with YBTC, you're only down $3,000. You could make that up in a month. One up month, $1 increase in the price on YBTC, and you get that $3,000 back. Where you got a long ways to climb to get this back up to that $50,000. If I was to choose between MISTI and YBTC, and just so you know, this is not financial advice, this is for informational, educational purposes only. This is just my opinion. Personal finances are personal. You have to do what's best for you and make your own decisions, do your own due diligence. But if it was me, if I'm choosing based on what I'm looking at, if I was to invest in either one of these, it was one or the other, I could tell you I would be investing in YBTC. Not only because of this overall performance being so much better, but because this right here maintaining such a strong share price that it's not deteriorating and eating away at my bottom line like this is. With this, even doing a 50-50 drip, I'm losing significant value in a short period of time. Where this one, if maybe I don't take the full distribution, maybe I don't have to do 50-50. I mean, I'm up 20 grand by doing 50-50 in this scenario. Maybe I take 70% and only reinvest 30% and try to maintain about a $50,000 balance. We look back through this, you can see the 50-50 never dropped below your original value. Right here, I think, was the lowest we got, right at this 50,000, and that was pretty quick after buying, so it's not like it had climbed significantly. And then we get really close again down here when the market really tanked in the beginning of 2025 with some corrections that were happening, some fears that were taking place. We got down to 51,000, but you're still up from your original investment. Plus, you've been receiving dividends or distributions. I think a lot of these income funds, you need to look at, yes, there's a high distribution, but the best method probably to utilize is some reinvesting to maintain that value. But also be looking for funds like this that maintain a solid value throughout. What do you think about YBTC? What do you think about this video? If you like this video, please hit that like and subscribe button. It does help us out, helps the channel, get us to be able to produce more videos to help other people reach their financial freedom. I appreciate you joining us today, and I'll see you next time on Simply Money.